Student loan debt represents the second highest consumer debt right after mortgages. So it's no surprise that student loan debt might in fact be impacting someone's ability to buy a home. And according to a recent report by the Federal Reserve, that's exactly part of what's happening for younger adults. In today's video, I'm going to talk about different approaches to home buying when you have student loans. Stay tuned. Let's start out with a few housekeeping items about how student loan debt can impact your ability to get a mortgage. The first thing lenders are looking at is your monthly debt to income ratio. This is the amount you owe in outstanding debts and pay each month compared to the amount of income you bring in each month. This is where student loans impact your home buying ability the most because a monthly student loan payment can represent a significant amount of your income. Lenders also consider your credit score. Now, if you haven't defaulted or been delinquent on your student loans ever in the past, it's unlikely that student loans are having much of an impact on your credit score at all. The next thing lenders consider is the amount you can come up with for a down payment. A lot of borrowers pause here because saving up 20% of the purchase price for a new home seems impossible while you're paying off your student loans. And I would agree, that's a really tall order for most folks. But remember, 20% down isn't a requirement of getting a mortgage. Many first-time homebuyers put 5 to 10% down, and there are additional programs that can help with the down payment on a new home. Overall, there are two general approaches folks take to home buying. One is that they just rent, and the other is that they decide to swing both a mortgage and their student loan debt. Let's start off by talking about renting. This is the most common approach to dealing with the affordability of buying your first home when you have student loan debt. There's no shame in your renting game. Renting has benefits too. Homeownership is often talked about as an investment, but unless you're flipping a home, homeownership is really more of a long-term savings account, not necessarily an investment. Below, you can check out a link to the New York Times rent versus own calculator. This is still one of my favorite tools to assess the question, is it financially better to rent or to own? Even if you're waiting to be able to afford a mortgage, it's a good idea to take a look at this calculator now and start thinking ahead. I know a lot of the folks watching this are in areas with really high cost of living due primarily to the cost of housing. The second approach borrowers take is to just add the mortgage to their mountain of student loan debt. There's nothing wrong with this approach either. Some borrowers have a different situation that makes homeownership more appealing to them or even necessary. Whether your homeownership is right for you because you've been in school a long time, you're older when you graduate, you have children, or heck, maybe you just even have a really cute dog that you want a yard for. But how are borrowers navigating their student loan debt so they can also swing a mortgage? It comes back to those three factors we talked about that student loans impact. One strategy for borrowers looking to improve their debt to income ratio is to switch up their repayment plan to the one with the lowest monthly payment. Typically, that includes income-driven plans and the extended repayment plans. It's important to note that while these payment plans have the lowest monthly payments, you are going to be in student loan debt the longest and have the most amount of interest that you pay over the life of that loan. But it's a trade-off. If you want to own a home and you need a lower debt to income to do it, it's something that borrowers can consider. Maybe you'll be in debt a little bit longer and maybe you'll pay a little bit more interest, but the whole time you'll have a house to call your own. Some borrowers are able to count on loan forgiveness through a program such as PSLF. For those borrowers, the end of student loan debt is in sight after 10 years of making income-driven payments. That typically means they can afford to make mortgage payments thanks to the low monthly payment under their income-driven plan, and because of the loan forgiveness, they don't have to worry about taking forever to pay back their student loan debt and paying all that extra interest. Those are just a couple of ways people approach the home buying situation. Where do you stand on the home buying spectrum? Are you renting until you can afford to buy? Are you renting forever? Or have you already bought a home? Let me know in the comments below. And as always, if you liked this week's video, please give me a like and hit that subscribe button. There's a new video every Wednesday. We'll see you guys next week. Bye!